is a deep understanding of the critical drivers of greenfields exploration by junior resource companies and by the majors. You can't hope to attract them to invest in your country if you don't understand how their business model works. And I just want to put it right up front. The most risky thing right up front is venture capital funded junior exploration. They don't have a deposit to explore. They raise $10 million. They want to go out there and knock the lights out. But if you impose any extra conditions on them up front, it's extremely difficult for them to actually do the exploration and find a viable deposit. So the countries that are successful, and I'm just thinking about the chart that everyone sees, where there is a very clear risk, which is much higher risk, and as you spend more time proving up a deposit or doing the initial exploration, finding a deposit, and then doing the proving up of that deposit, your risk goes down and your cost of doing so goes down. So I think we haven't yet got to the stage of really understanding as a country what really drives greenfields exploration, venture capital exploration from a country level perspective. And the reason I make that point is that 90% of all the exploration that happens in South Africa is by the majors. Only 10% is juniors. It is by venture capital funded companies. We've only got 12 companies listed on the JSE, junior exploration companies. On the Toronto stock market, they've got 1,600. On Sydney, they've got 600. Why? Again, do we understand the business model of the venture capital funded companies? My second point is a coherent, globally competitive, predictable and stable exploration strategy and plan that promotes investment in exploration. And I use the words again, it's got to be globally competitive. Don't sit there and think for a moment as South Africa that we've got all the minerals, people are going to come. They don't give a damn about South Africa. They will come if they can viably find deposits in South Africa on a cost competitive basis. That's what we've got to get right from our own thinking perspective. We need a transparent, modern mining cadastral system. We need urgent reduction in all the backlogs in terms of the applications by the DMRE, and obviously a tax incentive system. You talked about flow-through shares. We could modify it. And then obviously we can also talk about a dedicated fund for junior explorers in South Africa. Why is exploration critical for South Africa? Well, first of all, if you don't explore, exploration is the lifeblood of any mining sector in any country. You don't explore, you don't have a pipeline, you don't have projects that you can develop. The reality is that the new project pipeline in South Africa for new mining projects is very limited because we're spending so little on exploration. Most of the exploration is brownfields exploration around existing deposits, and it's simply major mining companies proving up what they kind of like already know, but so very little is what we see in terms of greenfields, grassroots exploration. And so, testament to the Minister and to the Council for Geoscience, where we got together and said, right, what do we need to do to try and fix all the different issues? Why do we need the exploration of mining? For every 1 million spent on mining production, 1.3 million is added to GDP. There are huge employment multipliers. The mining sector alone, from a sales value perspective, last year exceeded 1 trillion rand. And if you look at the contribution that we make to the fiscus, etc., the mining sector under this COVID environment has really been the sector that's bailed South Africa's economy out. And I think we need to say that right up front. But exploration is critical to enable us to get back on track from a country level perspective. Why are we not attracting investment in exploration? We're not focused on the critical investment drivers of greenfields venture capital funding. We don't have a competitive framework in place that properly encourages investment in exploration, and there I'm talking about short licensing times. I'm talking about clear rules, protection of proprietary information, etc. We've had a lack of certainty on application of existing rules. We've got the mining charter that talks about the fact that you don't require section 2D and 2C to be applied when you apply for a prospecting right. We've got all the regional managers applying exactly that principle. So how do you make a decision as a junior resource company when you've got that level of uncertainty? We've got something like 2,000 outstanding prospecting rights still caught in the DMRE system beyond the dates within which they should have been dealt with, and the DMRE has, I think in the last short period, done something like 1,000, processed a further 1,000, but there's still something like 3,500 rough numbers of exploration and other authorizations that are outstanding. The lack of transparency in the processing, it's very difficult for someone to know exactly where their permit is because you phone one official, phone another official. There's not a sort of transparent system where someone can go in and check where their application is on the system. The long delays in the granting of rights has had a big impact on junior companies who cannot carry a long delay in the application of the rights. The lack of tax incentives, and we've got other country-level challenges. What this has meant for the country is that we are only attracting about less than 1% of global exploration expenditure. We were attracting about 5% at the peak in 2003. For more than a decade, our exploration levels have been below 1%, and that's really, really tough. We're just simply not attracting the dollars that we should be. And again, I just want to spend one quick moment on what venture capital funded companies do. These venture funded capital companies raise $10 million. Often the chief geologist, the chief financial officer, the chief executive, and the chief bottle washer are the same person. They're very small companies. They're focused on finding a deposit, and 9 times out of 10, they won't develop the deposit. They'll sell it to a major or to another company. If you put in place long licensing times, very high barriers in terms of red tape, etc., you just kill the prospects of them coming to South Africa, and that's why they're not. They're not coming to South Africa because we've created an environment which has been unattractive for the junior resource companies to invest in the country. So let's touch on a couple of the documents that have come out recently. So they produced this exploration strategy. We had nothing to do or input into the strategy. That was the DMRE producing a 13-page strategy document, which in my view doesn't resonate with the actual exploration plan that was developed. So you've got 2 documents that have come out and they don't talk to each other in my view, but we can have a discussion about that. And the minister has made it very clear, and I had a long discussion with him at the Indaba, that this is a discussion document. It's a draft document. He's waiting for all the inputs. We will have further detailed discussions with him, including obviously on the Fraser Institute survey, where each of the different pillars, we're going through the pillars at the moment and just seeing what we can do to see how South Africa can improve it. On the exploration plan, we were pretty comfortable in terms of the outcomes. Mostly, the plan was what we had discussed and engaged. The process of approving mining and prospecting rights is a disaster. That's SAMRAD. The word that's been used is dysfunctional. We need a new mining cadastral system. We need tax incentives to encourage exploration, etc., etc. So we basically agree with the upfront view and a lot of the content of the document. There's a couple of areas that we're not entirely convinced about. This is in the areas around ministerial discretion. There's now a merit system put in place versus a first-come, first-served system, which creates its own set of challenges. And we think that that creates a degree of uncertainty which will be negative for attracting that level of venture capital funded exploration, because how do you determine the merit of a foreign company coming to explore in your country? You know, it's something that you need to think about. There's a couple of other points around the tenure. You know, these projects, because South Africa is such a vast country, and yes, we do have significant mineral deposits, but trying to prove up a deposit from initial grassroots exploration right through to actual development of a mining project often takes 15 to 20 years, and so timing is a critical issue. We've had the publication of the Geoscience Act Regulations coming out, and we've got a couple of concerns on it, in particular around the proprietary information and how the proprietary information will be engaging the DMRE and the Council for Geoscience on that, because when you allow a venture capital funded junior exploration company to do the exploration, you also want them to be able to have the security of tenure of selling on that product or the project to someone else at a particular point in time. So this is an issue that we have picked up on. So what are we looking for? We're looking for a stable, predictable, globally competitive exploration framework. We think the plan is moving in the right direction. We don't think the strategy wording captures quite what we were thinking about. We do need an environment which provides the free, pre-competitive geological information. So we're basically saying the Council for Geoscience needs to be given more money by Treasury to do the high-level geophysical mapping so that we can provide that pre-competitive information at a faster pace. Obviously, a fully functioning, transparent mineral cadastral system. We know the DMRE has gone out on RFP for a new cadastral system. They basically want to develop a bespoke, brand new system which will take 3 to 4 years to develop. And in our view, we should actually be taking an off-the-shelf system. We've got a number of world-class mining or mineral cadastral system companies operating in South Africa. And again, that's a conversation that we are having with the DMRE. We need clear rules and requirements spelled out in legislation, regulation with guided ministerial discretion. You can't not have ministerial discretion, but it's got to be properly guided. and wherever possible to reduce any imposts onto the junior resource companies in particular. Short licensing times, what we call smart tape, and the promotion of security of tenure. We do talk about the proprietary information, and that's a discussion that's important to see what has been happening in the rest of the world. And then obviously this issue around fiscal incentives that reduce the risk of raising the capital. So the reason that flow-through shares work so well is basically it gives you a tax feed-through right from the money spent on exploration right through to the taxpayer, who then gets a tax benefit for investing in the exploration company. And from my perspective, I think it's a really sensible program, but Treasury don't like giving incentives. They're not that convinced on the incentive side. We are, in our view, moving in the right direction. Obviously, it's been a little bit slower. The exploration plan came out, I think, a year later than we were certainly hoping from our side, because the discussions with the DMRE actually had concluded by March last year, so I'm not quite sure why it took a bit longer. But we are engaging. There's a very robust conversation. It's a robust but respectful conversation that's taking place on the exploration plan. It's starting to point in the right direction. We want to get things to happen a lot quicker, because without exploration taking place, the projects that are going to happen in 10, 20 years' time ain't going to happen unless we get this exploration running at a much faster pace.